Some pain trades out there. Financials have been a pain trade in the equity market. In the bond market, here's a pain trade that I'm sure that Bill Gross, if he could join us, would speak to. And it's the spread between Treasuries and bunds. I mean, I've lost count of the amount of people who have come on programs with me and said, it can't go much wider. Guess what? It goes wider. I mean, it's went wider again in the past day or so. And hopefully we can bring it up on screen because, Lisa, I think this, for me, captures this divergent story that no one wants to continue believing in, but this bond market keeps capturing it. How much wider can this spread go, and how much oxygen is left up there as we approach 300 basis points for tens, bunds versus Treasuries?
I mean, I think in some ways this keeps a cap on Treasuries. I think that it can't go exponentially wider from here. I don't know, can it go another 50 basis points? Maybe. Probably not because bunds are rallying to zero, probably because Treasuries are moving higher. But at some point, the global flows end up back in the U.S. market, which kind of compresses where that spread could ultimately go.
At some point, it has to hit bunds, is the argument. At some point, bund yields have to go higher. Look, it just hasn't been happening in the vicious way I think some people have been waiting for.
Not at all. And I keep going back to hedging costs and that being a huge driver. And we've already seen kind of a big move at the end of Q3 in the cross-currency basis, kind of globally, and especially in the euro. So kind of that year-end scramble for dollars, you know, the Christmas season and this seems to start earlier every year. And that's something that's contributing to that spread being as wide as it is.
It's something that actually Bill Gross references as well in a tweet on the Treasury sell-off, right in the following, if we can bring it up. Euroland Japanese previous buyers of 10-year Treasuries have been priced out of the market due to changes in hedge costs. For insurance companies in Germany, Japan, for instance, US Treasuries yield only negative 0.1%. And that lack of foreign buying at these levels likely leading to lower Treasury prices. Lisa, what do you think about that when you factor in hedging? What yields actually look like to the foreign investor right now?
It's definitely less attractive than it's been. But if you accompany higher rates in the U.S. with a steeper yield curve, actually, you could buy 10 years and they're at a higher yield than they were yesterday, right? Higher than the incremental cross-currency basis cost. So I agree it's absolutely less attractive, but you have to think about the direction of the curve as well, not just the overall level of yields.